Apple shares moving higher this morning, up by about 1.7%. That stock dropped by 3% on Friday after President Trump threatened a 25% tariff on iPhones. Joining us right now is Gene Munster. He's Deepwater Asset Management's managing partner. He also owns that stock of Apple. Gene, the front page of the Wall Street Journal says the bad year for Cook keeps getting worse, lays out a litany of things that the company's been dealing with. What do you think about the stock right now?
I think we're going through a phase of 1 to 3 months where there's probably going to be greater uncertainty from investors. And if we rewind to the March report, the results and guidance were actually impressive, but the stock traded off because there were 7 questions about the outlook beyond the June quarter. And I think that what we saw on Friday with the U.S., with the potential tariffs around the iPhone, I think underscore the uncertainty about what's going to happen beyond the June quarter, beyond the September quarter in this case. In fact, that Tim Cook is navigating something that is uniquely fluid to what he's encountered for the last 10 plus years. And so I think that that does create a little bit of an overhang. I think that what we're going to see next week or 2 weeks from now, WWDC is going to be critical to how investors think about the Apple story for the long haul, because that, of course, we're going to hear more about their investment in AI. They have, of course, been behind the curve on that, but it's rumored that they're going to be talking about their own large language models, which is going to be a surprise, I think, to some investors. And this kind of plays into this theme that over the next 1 to 3 months, it's going to be a transition period for Apple investors. But if my math is right, and they are going to be pursuing more large and small language models, that probably means that Apple is going to be more aggressively investing in AI infrastructure. And of course, they're the largest of the mega caps that has been slow to make that investment. So, Becky, I think that we're going to hear a lot about the impact of this greater spending, about this probably when they
Gene,
report their June quarter.
I'm confused by this. I mean, Apple is getting dinged now for falling behind some of its peers when it comes to AI spending. Do you want them to spend a lot more money? Because that stock had been rewarded in the past for not spending the same on CapEx as many of the other big tech companies when it comes to that. You want them spending billions of dollars to build out AI at this point?
Absolutely. I think it's the right call. I think that's what investors want. I think that they really have fallen behind the curve when it comes to AI. And I think that that would be a major step forward for, I think, investors' confidence in Apple and AI ultimately. So, yeah, I think that that would be a big positive step. Put it in perspective, they're spending $5-10 billion a year on this AI infrastructure.
Stock buybacks?
Probably, yeah, probably should be like 40 or 50 billion a year.
Yeah. So you would rather have them do that than do the stock buybacks at this point?
Absolutely. I think investors want them to invest in the AI future. We saw what we saw with Johnny Ive. That's a huge deal. That's a big shift in terms of how consumers are going to be using AI tech. And I think that they need to more aggressively embrace that. And so this is a big opportunity for Tim. He's been behind the ball when it comes to AI for the past year and a half. And I think that WWDC is going to be a big opportunity. Again, they're not going to revise their CapEx outlook on June 9th here. But I think what they will do, again, is set the table for spending more. I think that the biggest missed opportunity is they don't fully embrace that. And again, the contours and dynamics of the whole conversation are changing on a weekly basis. I just want to go back a little bit to this Johnny Ive piece, is that ultimately—
Johnny Ive and OpenAI, yeah.
Right, from OpenAI and him pursuing a screenless device. Why this matters and why this impacts Apple and their CapEx is that I suspect that Apple is going to be anxiously waiting to see what they show next year. They'll probably ship it in 2027, but they said that they're going to show us more next year. But Apple's going to want to pursue whatever that device is. They're going to want to be a fast follower like they often do. But again, to have the kind of the substance internally to be able to power these devices, they just need more around the large language model. I recognize that would be a huge step for the company. It's absolutely the right thing to do, even though that they are behind these other large language models. Look how fast Grok made progress and XAI. It can be done. And I just encourage Cook, and I think he'd be applauded by investors to be making those greater investments.
Gene, the question, though, becomes whether all this becomes a commodity, meaning that everybody has it, in which case there is a larger question as to whether you'd be better off buying another business. And I don't know if you think in this regulatory environment, and whether, given Tim Cook's newfound tension with President Trump or not, whether they'd allow it, but could you go off and buy an Anthropic? Could you buy somebody else? I know you're saying that, you could do this quickly and try to build up your own model. But the truth is that they've tried, and they're struggling, and maybe they're not investing enough. But if you could just take one of these others, is that worth it?
Yeah, you're probably onto something there. Probably something along the lines of Anthropic. That's the most logical path forward. I do want to say something related to Cook and Trump, and this impacts kind of the probability that they could purchase something from Anthropic. So kind of things hit the wall, went a little bit crazy on Friday morning with this 25% iPhone tariff conversation. On Friday afternoon, I talked to some former high-level U.S. trade officials. And this is something in a world that I don't fully understand. But there were a couple of things that were important relative to Apple and Cook and the relationship that I took away from that. And I think the first piece is that the impact of these tariffs is probably less than people realize. The tariffs are calculated on the cost of goods coming into the country. And so this would be about a 14%, based on my calculation, increase in the iPhone. So it's not as much as people suspected. But the other piece that was really important was understanding that what is most Cook, yes, he does want to have phones made. He does want a close relationship with Apple and have them make phones in the U.S., but ultimately, what's more important is the economy, and that's what voters vote on, not for the greater good of the country longer term, some sort of shift to making devices here in the U.S. for some sort of security reasons. But I think that piece around the economy actually left me with a sense that the rhetoric isn't going to be, that the ultimate kind of impact isn't going to be as great of these tariffs as what I suspect, because the risk of impacting the economy would risk, I think, electability down the road. And so I would just kind of put that all in the conversation with what Apple will be allowed to do in terms of other acquisitions potentially. I think that it will be choppy for the next 1 to 3 months. But my suspicion, based on conversations like I just mentioned, is that I think that this is going to kind of work itself out. So, Becky, your first question was what do I think about Apple? I don't know what's going to happen the next 3 months, but I continue to be confident that they're going to spend more on AI. They're going to figure this out, and they're going to benefit when we start forwarding to 26 and have higher growth numbers.